A lot of home buyers have made the fatal mistake.
Huge mistake! Huge mistake!
Of getting an ARM. It is an adjustable rate mortgage that was really popular back in 2008, and they are instantly regretting it. But why are they regretting it so much now? My name is Orlando, and welcome to my channel. We're gonna jump right into it, guys. A lot of home buyers at this exact moment are thinking to themselves, why did I take an ARM? Why did I really want to get into this type of financial instrument? Because they thought that they were going to get a better rate and it was going to last, right? Of course, you want to get into your home right now. You want to look at it and say, I want to get into my home right now. I want to get the size of a home that I want. I don't care if I pay $50,000 over. They're emotionally involved in the home buying process, and they will do anything that they possibly can, even going in blind, right? Even going into a situation where you don't look at any appraisals, you don't get an inspection done, and you overpay. You know, some of these numbers that I'm seeing, guys, some of these articles that I'm seeing, and some of these videos of people paying $50, $80, even $200,000 over asking price. All because they want the house that bad and they get caught up in the gamification of buying a home. I'm going to be the eBay top bidding winner. They want to win the house so bad because they want to just win. They want to get the house, so they'll do anything that they can. They want to win this contest, be the top guy who wins. And that's not what buying a house is about. When you guys go into the home buying process, you need to go in with logical thinking to yourself, is this a good school district? Do I want to live here? How long do I see myself living here? And also, last but not least, is the price. Is the price of the home worth it? If you're overpaying on the house, from the very beginning, you're losing. In the very beginning, guys, let me say that one more time. If you're purchasing a home and you overpay for it, you're losing immediately. Immediately, guys. You are looking in a situation where you're putting money in the seller's pocket and taking money out of yours. Because I can promise you, when a recession hits, if you think a recession will not hit the housing market and you think that a recession will skip over the housing market and it will just hit stocks, employment, companies, all that other stuff and won't touch the housing market, then by all means, by all means, go for overpaying for the house. I think it would be foolish to think that way, to think that a recession would not touch, one finger would not be touched on the housing market. Housing is normally in a recession one of the top 3 things that are hit, so you have to be wary of that, guys. But let's just look at some data here real quick, okay? This is going to blow your mind when I show you this. But right now, the average interest rate currently right now is 5.288% for a 30-year fixed mortgage. Now, isn't that insane, guys? Because I remember I was doing business loans just last year at 5.5%. Now, regular mortgages for residential homes, primary residence, are at almost 5.5% also. They're at 5.288%. That is a 30-year fixed mortgage, guys. A 30-year fixed mortgage today. That is insane. Now remember, if we go back, we take a trip to the past. Last year, rates were 2.68%. Now remember also too, we have inflation that's high and the Fed just bumped, just tiny bump, guys. A tiny bump of 0.25%. So what is going to happen when the Fed increases rates to 0.75 or 1%? Because they have said they're going to be more aggressive because the rate increase that they did nothing to inflation. It did nothing. So to infect inflation, they're going to raise it higher. What does that mean for this interest rate of 5.288% when we did just a small we're going into the sixes, guys. We're going into the sixes. But here's the funny thing. We have a 3/6 arm. Now, let me just explain exactly what 3/6 means. So the number on the left, the 3, is 3 years at a fixed rate. The 6 means that after the 3 years, it will change every 6 months thereafter. So 3 years of a fixed rate, and then the next number, the 6, means that every 6 months it will fluctuate to what the market rate is. Okay, and then we look at this rate. It is 4.604%, not far behind a fix, but it's still lower. And people are choosing this rate because they're thinking to themselves, it allows me to buy a bigger home right now. I know it'll only be fixed for 3 years, but I can refinance. I'm going to refinance. Where have we seen this before? Haven't we seen this exact sentiment of individuals thinking that kick the can down the road and then refinance? Yeah, we've seen that. That happened in 2008 when people thought they could refinance, but the recession hit, and all of a sudden, you can't refinance anymore because you're upside down in your house in value. So then we go to the 5/6 arm, 5 years fixed, 6 months thereafter. Every 6 months, it will change from that point. And that is at a 5.266%. Look how close that is. Look how close that is to a 30-year fix, guys. Look how close that is. I mean, it is point something something zero. Like, it's so close. And then we have the 10/6, 10 years fixed, and then 6-year arm, 5.328%. It is over. It is over the fixed rate. Now let's look at this. We have the blue line here, which is the fixed rate. Now you look at everything else, which is the arm above it. Some of these people bought into a fixed rate, and in some instances, it was already higher than a fixed rate. But here is the point where I was explaining to individuals. Let's take a look at this chart here. We see the blue line here is fixed rates. And then we see all of a sudden the arm is higher than the fixed rate now. So some people would say to themselves, hey man, I just got into this arm. and already my rate is higher than a fixed rate. And that is the reason why so many people are already thinking to themselves, did I make a bad decision getting into this arm? Am I going to be regretful that I jumped into an arm to begin with? Because right now, an arm is more expensive than a fixed rate. And we remember when I did that video talking about people getting into arms, people were getting into them because at that moment they were lower, but they're not lower now. They're not lower now. So I say to individuals, this is another red flag of how data, if you just go back to the past, guys, and if you are a vivid watcher of my videos, you will know that I told you guys that when you're looking at these arms, you have to look at what happened in the past and understand that anything is going to change. You can't tell the future. I can't tell the future. No one can tell the future. So to protect yourself against that, at least if you're in a 30-year fixed mortgage, that your rate will stay the same for the next 30 years and you don't have to worry about that. But in an arm, just to get into a home that you are trying to win in an eBay style fashion, and the underwriter is telling you, well, underneath an arm, you can afford this house, but in a fixed rate, you can't because the arm rate was lower. This is what can happen, guys. You can be in an arm and all of a sudden it can creep up on you. Imagine, this is the 10-year arm. What about if you were in the 3-year arm and then in the next 3 years, you stuck in this scenario where we just talked about you being upside down in a home? You can't refinance out of that. You have to come up with a big lump sum to pay down the loan just to refinance into a fixed rate mortgage, guys. So once again, This is an example of you deciding, should you buy? Should you rent? If you do buy, do you get a fixed rate mortgage? Do you get an ARM? You have to do your research to figure out what is best for you. Once again, this video isn't doom and gloom. It's about giving you the information that you need to decide for yourself. Should I do any of those things that I just spoke about, or should I do something else? If it works for you to get an ARM or whatever, go for it. I would say for most people, ARMs are not the best choice that you can make, especially with this foggy future that we have coming on here. We have a recession that's gonna hit, the downturn is gonna happen. Do you want to really get caught up in that and not know where you're gonna land on your primary residence, where you and your family live? Not me, not me, not me, not me at all. And I don't think you do either. So once again, I hope you got value out of this content. I need you to check out this next video here. It will help you learn about this crazy housing market and also get into your first rental property. Also in the description, check out our membership program. I'll see you guys in the next one. Thanks.